The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Thank you for joining us for our Landus Section 199A overview. We do have quite a few folks still getting into the meeting, so we're going to wait about 60 to 90 seconds, and then I will turn things over to our CFO, Mark Miner. We'll get started shortly. Thank you again to everyone for joining. I'm going to turn this webinar over to the CFO of Landus, Mark Miner.
Good morning, everyone, and thanks for getting on our webinar. First, I'll introduce people on our side that are scattered across the country. The voice you heard earlier was Alicia Hewen. She was from our communications team. We also have Kathleen Lyons, our corporate controller, Dan Bankins, head of accounting. They're on the call as well for the question and answer at the end. Our auditing firm is Clifton Larson Allen, or CLA. We have John Rassi and Kelly Hardy that works on our account. And the reason you're all on here is to hear Paul Neefer, the expert across the country on Section 199, and we will get him. We have a few slides to begin with, and Paul will be on at the end. We really appreciate him getting on here because he's in California and it's way early out there. So just let you know a few housekeeping things. The webinar is being recorded, so we'll put it out on our portal so other people can see it. And if you miss something, you can absolutely replay it. Questions will be at the end. So there'll be a formal question and answer period at the end that you can use the question function on the GoToWebinar tool. And Alicia will help you with that if you have any issues. So first slide, we'll talk a little bit about Landus. We made over $8.6 million total income this year. So we are paying cash patronage out this year. Those checks went out Wednesday along with the notice of the Section 199. So the check's in the mail, as they say. Total of $1.4 million. That's 1 penny a bushel is what we sent out. It's 100% cash. What we're talking about today is the next piece is the 14 cents a bushel tax deduction opportunity that we sent out. So that's what we're talking about today. I just want to make sure that the penny a bushel, all cash, separate deal. Today we're talking about the Section 199. People that receive this benefit are the Class A members, or if you're a subscription holder. You don't have to be a fully paid member. You just have to be a subscription holder to receive the penny a bushel cash or the tax deduction of the 14 cents. And those bushels are bushels sold on our fiscal year, which is September 1 to August 31. Some considerations. The amounts are available in the portal today, so you can go look and see exactly what you're getting. As I said earlier, the grain checks and the 199 letters are already sent out. You'll get your 1099 in January of 2021. Paul will cover a lot of this stuff in detail. C Corps are not eligible. If you do pay W-2 wages on your farm, there may be a deduction on that, and Paul will cover that as well. This is a tax deduction, so you have to be in an income situation to use it. It's a use it or lose it type deduction, so you can't hold it for other years. So it may not benefit some of you, but certainly will benefit most of you. And again, we are not tax advisors. That's why we have Clifton, Larson, Allen on here to take any and all questions you'll have at the end. Quick example of what I'm talking about, because a picture's worth 1,000 words. So for example, if you brought Landus 300,000 bushels, we pay a penny a bushel, you get $3,000. It's all cash, so it's all subject to tax. And if you're at the 22% tax rate, you get $660 taxed. Net cash is $23.40. Nothing's held back in the co-op. We gave it all to you. Separate issue is the 199 pass-through at 14 cents. So 14 times 300,000, you get the 42,000 that goes on your tax form. 22% of that, again, if you're in the 22% tax bracket, it would save $9,240 of taxes. So between the $9,240, the $23.40 cash, we'd be paying out over $11,000 of cash or cash tax savings. So ask any questions at the end about anything specific to Landus, but that's kind of what we're talking about today. We're paying a penny a bushel, 14 cents pass-through. The pass-through can get a little complicated, so that's why we thought we'd have Paul Neefer from Clifton, Larson, Allen on here. He does webinars and does blogs. He does all sorts of stuff. He is the expert on this stuff. So I encourage you, if you have any questions at the end, to ask Paul. With that, I will shut my mic off and turn it over to Paul.
Thank you, Mark. We'll go ahead and get started on section 199A. As Mark had mentioned at the beginning, he said I was in California. He's got the right time zone. I'm actually in Washington State, but I was in Dallas, or actually Fort Worth, Texas yesterday doing some meetings, and flew home and got home about 10 o'clock last night, 10:30, something like that. So I was telling them early on, I typically only need about 5 hours of sleep. I think I got that from my dad. That was his typical amount of sleep he got at nighttime. So let's go ahead and go on to the next slide there. And we already covered a little bit as far as the section 199A deduction. It is a 20% deduction of net farm income, but then you also get the DPAD from Landus. So there's really two sections. We have what we call a 199AA deduction, which is that 20% deduction, and then we have what we call the 199AG, which is the DPAD flowing through from Landus. It gets a little complicated. I'm going to try to keep it at the 30,000 foot view here, but I do have various slides that provides detail, and these slides are available if you want them later on as far as a reference. So let's go to the next slide. Okay, so what is net farm income? Really, it is all net income from you as a farmer. So it's, let's say you're a sole proprietor, it would be your Schedule F income, but because of the tax reform changes on trade-in of farm equipment, we also then get to bring in your gains from trading in farm equipment. You potentially, if you have your land that you farm yourself, but it's in a separate entity, you get to include that, group that all together. So we look at that net bottom line farm income. But then we also have to reduce it by certain deductions. Our self-employment tax deduction, you might have self-employment health insurance deduction, could have a retirement plan, and then there's some other miscellaneous items that we won't go over today. But the three that I listed there are the ones that we most commonly see as far as having to reduce net farm income. So next slide. And then what is, I think Mark had mentioned briefly that there is a possible reduction in because of the grain glitch fix as far as getting that all technically worked out, what they said is when you have that 20% deduction, and if you're also a member or do business with a cooperative as a patron, then we're going to have a possible reduction of that 20% deduction. I know those terminologies, or reduction of a deduction, it gets a little bit confusing there, but essentially it's the lesser of, so let's say that, I'm just throwing out an example, you had a $50,000 20% deduction, and then you had a certain amount of sales, and it's just on the portion of the sales related to sold to the cooperative versus the non-cooperative side. So for most farmers, it's never going to be 100% sold to a cooperative. It could be close, but with the CFAP payments and ARC or PLC payments this year, likely you're never going to be 100%. Now on my slides later on, I'm assuming 100% just to make it easy, but there's a possible reduction, and it's a lesser of 9%. So instead of 20%, we might have to bring it down to 11%. So that's the worst that will happen. The worst that could happen is it comes down to 11% instead of being 20%, or 50% of wages. Now, if you don't pay any wages or you pay strictly commodity wages, there is no reduction. So for a lot of our farmers in the Midwest, they actually get the full 20%, plus they get the DPAD from the cooperative. So this is a pretty good deal, especially when we're dealing with marketing cooperatives such as Landus and so on. And some people get confused. They think, well, we got to take 9% of all of our QBI, our qualified business income, and reduce it. Well, no, it's just that portion. It's just a portion related to the sales to the cooperative. So for a lot of our farmers in the Midwest, it's zero. You know, it ends up being there's no reduction. I review multiple tax returns where there ends up being no reduction or very, very small reduction. So let's go to the next slide. So here's just a simple little example. We got a farmer that either sells 200,000 bushels, 400,000 bushels, or 600,000 bushels. And I'm just showing what, you know, net profit from farming, and this is after all those deductions we talked about, of anywhere from 75,000 to 300,000. And I was just trying to show what is the per bushel savings, cash savings from that 20% deduction. Just to give you an idea, I'm trying to just break it down into a per bushel savings, and it's approximately a little less than 2 cents on the smaller on the first two, and a little bit over 2 cents. But just mentally think, okay, if I'm just a farmer and I don't sell anything through Landus, I my potential benefit is probably about 1.5 cents. That's the maximum benefit I'm going to get if I don't sell through a cooperative such as Landus. Next slide. Now here we bring in the same farmer, same fact pattern, is selling their grain through Landus, and they're going to get that 14-cent per bushel DPAD deduction that flows through. And I go through and I assume, just to be conservative, I assume what's the maximum reduction we can have, and we come down that. Remember on the first farmers section, the deduction for the 200,000 bushel farmer was approximately $15,000. Now the deduction that this farmer gets is all the way up to 36,000. So it went from 15,000 to 36,000. On my next slide, we'll break it down to per cents per bushel. But the other benefit too doesn't maybe apply as much to grain farmers, but certainly dairy farmers. The real benefit also of the DPAD deduction that flows through is you get to offset 100% of taxable income, whereas that 20%, the normal 199 AA deduction, is limited to 20% of ordinary taxable income. So in a lot of cases, that first slide, that $15,000 deduction, it may actually go all the way down to 5 or 10,000, whereas that $28,000 deduction that's flowing through from Landus is going to be allowed 100%. So this is very, very conservative slide. Normally, your deduction is going to be greater than this. So let's go to the next slide. So what we're showing here is, remember, we got maybe a 1.5 cent benefit, net benefit, by just selling to a non-cooperative. Here, our extra benefit, this is the extra benefit. The minimum extra benefit that you're going to get is about another 2.5 cents, 2 to 2.5 cents by selling it through Landus. Now, this is assuming the worst case scenario in that we have that maximum reduction. So at a minimum, you're getting really an extra net cash out of pocket, so to speak, or cash in your pocket of about an extra 2.5 cents. So let's go to the next slide. And like I say, for many farmers out there, you're going to have no reduction. Notice that fifth line down or sixth line down where it says less reduction, it's just simply a 0. This means that you're under the threshold. There's a certain threshold where this deduction, that normal deduction, starts to phase out. Most of our farmers do a good job of keeping their income below that threshold, so it typically doesn't apply to most farmers. But in this case, there is no reduction. I think under the previous 2 slides ago, we're not going to go backwards, but on that first column, I think the net deduction was about 38,000, somewhere in there. Now it's up to 43,000. Look clear over on the far right-hand side for Farmer C. Now we have a $144,000 deduction instead of a $60,000 deduction. So it's just simply by selling 600,000 bushels of grain through Landus, you are for sure generating an extra minimum, an extra $84,000 deduction. But again, as Mark had mentioned, we have to have taxable income. We're assuming taxable income in these situations that you can use to offset that deduction. So let's go to the next slide. And so here, now we're showing the extra benefit. Remember that on the previous 2 slides ago, the benefit was about 2 cents. Now we're up to that maximum benefit of about an extra 3.08 cents. We could round it to 3 cents. So by selling through Landus, you're getting somewhere between at least a 2 cent extra benefit for every bushel you sell, all the way up to 3 cents, a little bit over 3 cents, based on the fact that that Landus is passing through that 14 cent per bushel DPAD. And let's go to the next slide, which I think is just a summary slide. So yeah, here's the summary slide. So if you don't sell to Landus and you're able to get the full 199A deduction, it's saving you, if you're in a 22% bracket, a little bit over 1.5 cents. Now, if you're in a higher tax bracket, the savings might get up closer to a little bit over 2 cents. And if you're in a lower tax bracket, it's going to save you about ½ cent. But I think most farmers, we typically certainly want to soak up the 10% and the 12% bracket. So by soaking up those 2 brackets, you're now in the 22% bracket. So that's why we're typically using a 22-cent rate. Also, Iowa does, my memory is, and I'm not an expert on all states, but I was doing an Iowa tax return recently. My memory is that Iowa allows you to deduct either 25% of the DPAD or 50% of the DPAD, which allows even a greater deduction net cash savings, so to speak, than what I'm showing on here. So we're probably looking at somewhere 4.5 to 5 cents by the time we factor in those state tax savings. So that's just a summary showing you when you sell your grain through Landus as a patron, you're likely getting at least a 2.5 cent. I'm going to say at least a 2.5 cent extra cash benefit from that DPAD deduction, assuming you're in a 22% bracket, which I think for most of you is where you're at. And I think the next slide is just to open it up for, open you up for questions. I'm not sure, are we doing those? I assume you'll be reading those off to me verbally. I think that was the housekeeping that we had on that.
Yes, thank you, Paul. So if you'd like to ask a question in the GoToWebinar chat function, there's a chat, so you can ask the chat to everyone, or there's a Q&A. If you type your question in that Q&A box, that'll come to me, and then I'll read that to our speakers.
I think while we're waiting for some questions to come in, maybe I can just briefly go over, now that we think we have President-elect Biden is going to be in office, we still don't know what the Senate's going to be, as far as, is it still going to be 51, 52 Republican? The House, we know, is very, very close to barely a Democratic majority. I think it's one of the closest houses in history as far as the majority. Just give you an idea, some of the proposals that Biden has proposed is, and especially dealing with the DPAD, he still is in favor of keeping DPAD, but he would like to phase it out if your taxable income is over 400,000. That's sort of his key numbers, that $400,000 level. So I think for most of you, the DPAD's still going to be good, even if we have a Biden presidency. Over on some of the other sides, dealing with estate taxes, dealing with top tax rates, dealing with capital gains rates, and so on, not as favorable. Especially on the state side, I hope those proposals don't go through. I'm not quite as concerned about the lifetime exemption amount being cut back to the old amount, because that's still a pretty healthy number. What I am concerned about is if they decide to eliminate step-up in bases at death, or they impose some type of capital gains tax at death. Now we have a pandemic, we have all the stimulus. Eventually, they're going to have to figure out how are we going to pay for all that. So those things may come into play. But I think with the Senate and the House the way it is, I'm projecting, at least for right now, until we see the results in early January, I think it's status quo on most major tax changes. I don't think too much will happen, at least between now and 2022. So with that, I'll turn it back over for some questions.
Very good. So first question, as I take my paperwork to my tax accountant, is there anything that I should notify them that is different this year as compared to last year?
Yeah, and I should have maybe put up a copy of the new 1099 PATR for this year. Now the accountant's going to know this, but you're going to notice on your form that you're going to get in January from Landus, there's a couple new boxes. There's a box, I believe it's a box 8 and a box 9, and that's information that your CPA or your tax preparer will use. It's sort of, it was based on the proposed regulations. They have not issued final regulations yet. The IRS hasn't. We hear maybe they're potentially going to issue those final regulations by year end, but we haven't seen them yet. So when you get your 1099, you're going to notice there's likely a couple new boxes with some numbers. Don't worry about that. That's something that your tax preparer will do. It is good to summarize your data or provide the QuickBooks, but there really isn't anything new this year coming through on 199A as far as how to calculate it, unless we get those final regulations and they show something different. And if that happens, we'll certainly provide that information on our blog immediately. But I'm not aware of anything right now.
Great, thank you. And a question, could you address guaranteed payments?
So I'm guessing they're talking about guaranteed payments as far as how that's calculated in your qualified business income deduction. So that's the 20% deduction that we were talking about at the very beginning. You're not allowed to have that 20% deduction on guaranteed payments. So if that's a big deal for you as a farmer, you have a farm partnership with multiple members or multiple partners, and you are doing a guaranteed payment, you probably want to talk to your tax advisor and say, hey, can we update our operating agreement and have what we call the preferred allocation? And in that case, maybe one of the owners gets the first $50,000 of profit, the other owners then split it, or however it might be. That's a way of maximizing that deduction. As far as the Landus D-pad, that doesn't really change that, because that Landus D-pad is a deduction that you get after the 20% deduction. And again, it allows you to offset 100% of taxable income, including capital gains, including qualified dividends, all of that income. So that's one of the nice features of the D-pad from Landus, is it does offset 100% of taxable income instead of being limited.
Great. So just to clarify, this deduction is not taxable, whereas the cash dividend is taxable.
Correct. When you have income, you're going to pay taxes on it. When you have a deduction, that reduces your taxes. So that's why on that summary chart at the beginning, it showed, okay, you had 300,000 bushels, you got a $3,000 cash payment, but you owe about $640 of tax, if my memory's right. So you come down to a net benefit of $2,360. Here we get a deduction from Landus of, let's say, $30,000, but and our net tax benefit on that is $6,000, $7,000, whatever the dollars are.
Excellent. And I think this question is for Mark. So Mark, if you want to get your trigger figure on your unmute. And I will caveat this one with, we would like to invite people to our virtual annual meeting on Monday, December 14th at 4:30. We'll be sending that link out either over the weekend or the first of next week. But can you talk a little bit, Mark, about what led to Landus's $8.6 million profit?
Sure. So local income is the part that we make from our operations, believe was pushing 1.7. So we had a very good year. We've made a lot of changes, and Landus is headed up and doing a good job there. We had good region money from our regional partners like CoBank AGP. We did sell some investments in REG, but the biggest thing is our local income. We are up, making money, trying to pay everything we can to the farmer owners. So we just had a good year, and it was just made by all the employees out there doing a good job, and Matt Carson's doing a good job of making changes and getting things going. So we just plain had a good year.
Thank you. I was just going to say, I don't have any other questions. So Paul, if you have any closing 199 comments, and then Mark, if you want to close this out.
Yeah, I have a question though, Paul,
Okay.
if I can ask a question. If I'm a farmer and I've deferred grain to next year, and I kind of realized that, I didn't use all of what Landus sent me, is there any options that I have at this point?
Yes, that's the nice feature with what we call a deferred payment contract. So that's where the farmer has sold their grain. Let's say they sold it today, but instead of getting the cash today, they actually pushed it into January 2nd, January 3rd, whatever it might be. That's the typical date I see, January 5th. Under normal accounting rules, cash method of accounting, we would pick up that income in 2021. But due to the fact that it is a qualified deferred payment contract, you've sold the grain, it's a receivable. It's essentially an installment sale and receivable. We, as the tax preparer, in conjunction with our farm client, can actually elect to bring that income back into 2020 and then use it to soak up that D-pad that flowed through from Landus. So we get the benefit of that D-pad. Now, that requires that you have a deferred payment contract, and it's a all or none. So if you had a large contract, let's say you had a 20,000 bushel contract, and that's $80,000 of income, you're going to have to bring in $80,000. We like to see some smaller contracts, some mid-sized contracts, and then some larger contracts. That allows us to sort of optimize that amount of income that we can bring in to 2020 to offset that D-pad deduction. Otherwise, if we don't do that, as you said at the beginning, that D-pad deduction really has no value because we aren't showing any taxable income. And the other key thing on that, when you do that in your accounting system, now we as the accountants or tax preparers are typically going to note that in our system, but you want to make sure that you don't double up your sales on that 2021 tax return. Also, I'm not sure, how does Landus account for, well, that's going to be okay because you have a fiscal year, you're doing it based on fiscal year, so we're okay. But you do also maybe have to make sure that you reconcile that 1099 that you are getting from Landus, just to make sure that you're matching up that, because some of that income might have been, I'm not sure on, I guess Mark, and maybe you don't know this, but if you sell the bushels, but it's on a deferred payment contract, does that sale show up on 2020's 1099, or does it show up on 2021's 1099?
On 2020's, it's when you sold the contract, not when you get the money.
Okay, so in that case, sometimes we do have to reconcile that as far as reconciling that on the tax return. So maybe that's back to that one of that first questions, is there something we need to let our tax preparers know? You may want to make sure that you do let them know, hey, I'd add some deferred payment contracts, and typically we like to get the statement from Landus or whoever the cooperative is so we can reconcile that.
Okay, thank you. Alicia, anything else show up?
I don't believe so. So if you'd like to have a few parting comments, we will wrap up the webinar for the day.
Sure. I want to thank everyone, Paul, for getting up this early and doing this. Farmers on the call, if you like the way this works, it's an easy way for us to share information. Talk to your local Landus location manager or salesman. If there's another topic that you'd like us to discuss, we get enough interest, we'll be glad to do this. Under COVID, this is an easy way for us to share information. So I encourage you all to let our local staff know if there's something you want us to talk about. We can certainly do that. Also, Paul Neefer is, if you Google him or whatever you want to do, Bing him or whatever you use, he's out there. He does a lot of blogs. It's a wealth of information that you can use, and it's all free. So use and abuse Paul whenever you can. Talk to our location people if there's anything else you want us to try to cover, because this is a fairly easy way to pass on information to you folks. So with that, I want to thank you all for attending.